Hello friends, in this lesson we shall discuss buyer's credit. First of all, what is buyer's credit, who arranges this and who provides this credit? Friends, buyer's credit is a loan or an advance. This is arranged by importer from overseas bank or overseas financial institution. And this finance is available, this advance is available against bank guarantee or letter of undertaking or letter of comfort which is issued by importer's bank. Objective of this credit is to finance imports into India, those imports which are permitted by the present foreign trade policy. Let us see how this system functions. Friends, in case of buyer's credit, there are two parties initially. One, the importer who wants to import goods into India. Other is overseas exporter. There is a contract between these two for purchase or sale of goods or services. Once this contract is made between these two parties, then importer makes a request to credit consultant for arranging such credit from overseas sources. And this consultant approaches a number of banks and finalizes this contract with one or other overseas bank. If the terms and conditions of this loan, which is arranged by consultant, are acceptable to importer, then importer makes a request to his bank, and meanwhile the exporter makes shipment of goods to the importer. Importer makes a request to his bank to issue bank guarantee or letter of credit undertaking or letter of comfort in favor of this overseas bank. So this importer's bank, he issues this bank guarantee on the basis of which the overseas bank provides this credit. On receipt of this bank guarantee or letter of undertaking or letter of comfort, the overseas bank releases the funds and credits the same to nostro account of this importer's bank. From the proceeds of this nostro account, the importer's bank is able to make payment to exporter on due date. So there was a contract between buyer and seller, importer and exporter, for which goods have already been shipped, and once this payment falls due, the importer's bank makes payment of these documents on due date, and this payment is made out of the amount available in a nostro account of the importer bank. On due date, the importer, he makes payment to importer's bank, and in this way the transaction is finally settled when this payment is remitted by importer's bank to overseas bank. So this is entire process of buyer's credit. Friends, in India, the rules and regulations relating to buyer's credit are regulated by Reserve Bank of India. So there are certain guidelines of Reserve Bank of India. For buyer's credit or supplier's credit, which is also known as a trade credit, there are two routes. One route is called automatic route, another route is called approval route. Friends, when amount is up to $20 million for capital goods or non-capital goods, then authorized dealers category 1, they can permit this remittance. But when amount is more than $20 million, then approval route comes into picture. In that case, permission from Reserve Bank of India is required for such remittances by authorized dealer banks. What is maturity period for this advance? Friends, in case of non-capital goods, this amount is available up to 1 year from date of shipment or operating cycle, whichever is less. If operating cycle for receipt of goods, for processing, etc. is lower than 1 year, then period shall be lower than 1 year. Otherwise, the maximum period can be up to 1 year. In case of capital goods, this period can be up to 5 years. As regards bank guarantee by Indian authorized dealer banks, Authorized dealer category 1 banks, they can issue bank guarantee favoring this overseas bank up to US $1,020 per import transaction for up to 1 year for non-capital goods and up to 3 years in case of capital goods. So these guarantees can be issued by importer banks in favor of overseas banks. Friends, as regards letter of comfort or letter of undertaking, in the month of March 2018, Reserve Bank of India stopped the banks from issuing letter of comfort or letter of undertaking. But banks can still issue the bank guarantee. So these are RBI guidelines. Now last part, what is advantage, what is benefit of buyer's credit? The first advantage is to the exporter. This exporter gets the payment immediately on due date. His payment is assured because payment has been granted by importer's bank. Hence, the payment is made on due date. So he gets payment on due date. Secondly, importer's cash flow is not disturbed because he is getting the goods on credit and he also gets time to pay the goods. Hence, his cash flow for other operations is not disturbed. Since the credit is available against this import, he can negotiate better terms, better discount with the exporter. Since his payment is assured, he is in a better position to negotiate the price with the exporter. And then payment can be made by importer in the local currency. So this credit is available for imports into India. The payment by importer shall be made into Indian currency, whereas on behalf of importer, this payment shall be made in foreign currency to the exporter by the importer's bank. So these are benefits which are available for buyer's credit. Well friends, I am sure the contents of this video will help you to understand this concept of buyer's credit. In case you found the video useful, please do not forget to subscribe to our channel. And meanwhile, thank you very much for watching this video. All the best friends. Thank you once again.